Greetings. We're now at the last technical topic. So we've got a few basic skills in time value of money and considering the different models of different techniques we could potentially use to evaluate projects. Now let's step back a bit and apply those and work out where we get the cash flows from, what information is relevant for making decisions. So what we're going to look at in this unit is, firstly, we're going to talk about estimating the cash flows, where you get them from. We'll talk about the issue of relevant cash flows. Which cash flows are relevant for making your decision? And one of the unfortunate things we will see is sometimes accounting generates numbers that it allocates to business units that aren't necessarily relevant for making a decision. We're going to talk about the impact of tax savings, the investment in working capital, cash flows at the end of the project life. We'll talk about inflation, and then we'll look at a few examples. Okay, so essentially these are our objectives for today in Unit 5, to work out how to determine relevant cash flows and how to determine if a project is acceptable is really a question of applying techniques that we already have. So in selecting a project, what do we need to do? We need to identify the costs and benefits of that project in a cash flow sense, remember. So all of the investments up front that we make in that project are part of the initial cash flow, and we're going to have, over time, after we've started the project, we're going to have some feedback from that. We're going to have a benefit that either comes from increased revenues or reduced costs, but countering that, in those cash flows, we're going to have some additional cash flows that are associated with the project.